Hey guys, and welcome to the trading channel. Today I'm going to show you a cipher pattern that we were able to get involved in over at the EAP. This cipher pattern was on the pound yen and has already banked us around 80 pips. We're looking for our second targets now. Hopefully we can get some follow-up movement here on the pound yen as it falls down even further. I'm also going to give you some pointers on how to identify impulse legs in the market. I know a lot of you guys have problems searching for impulse legs and trying to figure out whether something is an impulsive move or not in the market, and that can be a subjective thing in the market. The most important thing is to make your own rules so that it's non-subjective if you're having trouble finding them. And I'll tell you guys exactly what I look for to find impulsive moves a little later on in the video. And I'll also be sharing with you guys my rules and ratios that I use in the markets every day in order to trade cipher patterns. So sit back and relax through the intro and disclaimer, and I'll be right back to talk about this pound yen cipher pattern and how I find impulsive legs in the market to draw my advanced patterns. Alright traders, so the first thing we're going to do is go ahead and take a look at the emailed analysis that I sent traders who are already involved in the EAP to alert them of this trading opportunity. So here, as you can see on the email that I sent out to all of the EAP members, I posted a very nice screenshot showing members exactly what I was looking at, this cipher pattern completion. And we did not only get involved in this trade because it was a cipher pattern, we actually had a couple of other rules for entry that I used in the EAP to help us to get involved in this trend continuation trade to the downside. So as you can see, I did have a very nice screenshot for all the members to look at in order to really understand what I was looking at in the market, as well as the levels that I was interested in. But what I mean by levels is I had my exact entry, my exact stop, and my exact target posted in that email way before the trade took place. So anyone who has tested the plan that I have created for you in the EAP and is comfortable with it and has already came up with a risk management plan had a very good opportunity to get involved in this trade. So let's head back over to the charts now. So guys, if you're interested in being a part of the EAP and receiving emails like the one you just saw to alert you of trades like the pound yen we were just looking at, and like the one you're looking at on the screen in front of you here on the Aussie New Zealand, we actually had this trade this week. And I'll take you guys over to that email now. Here, as you can see, my EAP analysis. This was the 5th email I sent out this week on 10/5, and it was alerting traders that we had a nice double top entry according to our rules. As you can see here, I did have my levels pointed out for this trade, a clear entry, stop, and target to give anyone who has tested the system that you learn at the EAP and incorporated it into their trading plan with a good risk management strategy, an opportunity to get involved in this trade if they so choose. So let's head back to the charts. As you can see, our entry level was right around here, right after this double top that we got on the Aussie New Zealand, and the market did push down to actually hit our targets, currently up a little over 43 pips on this trade. So guys, if you're interested in getting emailed analysis like this or becoming a member at the EAP, then I'll put a link in the description below to the tradingchannel.net, and you can head over there and read a little more about the EAP and get involved if that's something you are interested in. But now let's go ahead and get back to the cipher pattern and impulse leg tutorial back over on the pound yen chart. If I bring it out to the 4-hour, you'll see exactly where I entered, which was the open of this long green candle that you see here. So as you can see, my entry was around this area, and we were looking for this move down that we managed to get. And like I said, we've already banked about 81 pips on our first target. Our stops are at break even now. We're managing this position on the way down in order to try to capitalize on a further trend continuation move. So let's go ahead and delete some of these drawings so we can talk a little more about the cipher pattern and impulse legs. So we knew the market was bearish, right? And as I've told a lot of you, if you've seen any of my advanced pattern videos or any of my other review videos from the strategies I use here on YouTube, then you'll know that I trade advanced patterns in consolidation and with trend. As you can see, we are absolutely with the trend with this cipher pattern, so that's the reason we were able to get involved in it as well. And what I'll do now is just go ahead and go over the rules and ratios that I used for this cipher pattern. And I'll actually go ahead and write those out. Alright guys, so what we're going to look at is an X to A retracement of 38.2%, And don't worry, I'm actually going to draw these out with you here in just a second. But as you can see, we have an X to A of a 382 retracement. We have an X to A again, and this is where this pattern, the cipher pattern, actually differs from the Gartley, bat, and butterfly. Both of our first measurements are going to be from X to A. So the first one is a retracement of X to A. The second one is going to be an extension from X down to A and back up. And then going from X all the way down to C with a retracement will give us a 786 retracement for our D completion. And let's go ahead and go over that now. So if we go ahead and label this, we'll label this X to A up to B down to C and finally up to our D point completion. So if we read along here, we'll go from our X to our A of a 38.2, X, pulling it from X down to A here. If I just bring that across, you can see we easily get our 382 retracement, which is our purple line here. Go ahead and delete that, and we'll look at our extension. So if we pull from X to A, and this is how you draw the extension for the cipher pattern, back up to X. So I'll do that one more time. Take our extension, we go from X here down to A here with the extension tool, and then right back up to X here. If I just pull that across, you'll see that we get a 127, and there's another rule here that we have to abide by. Market must touch this green line, which is our 127 extension, and cannot close below our 1414 extension. So it must touch the 127 and cannot close below 1414, which is our red line. So now that we know those two rules are met, we can start looking for our D completion. If the market was right here, we could have taken our 382 retracement, combined that with our X to A extension of 127, and then we could have went ahead, took a full move here. For our D point, we're actually going from X all the way down to C with a retracement tool, and we would have known where the D point completion of our cipher pattern was going to be, this blue 786 retracement. So the real power of advanced patterns is the fact that you can set limit orders. You don't have to be around your computer if you're trading advanced patterns on higher time frames like the 1 hour and the 4 hour charts, because you already know where your D point completion will be. Now there are some people that trade advanced patterns as a potential reversal zone. I do not do that. Most of the time with my advanced patterns, I'm just trading them with a limit order. So our 786, this black horizontal line, is going to be our D point completion. And what I do is put a limit order at that D point completion, and that would look something like this. I normally put stops above our previous structure here, this X leg. So if we go above X with our stops, and the ATR on the pound yen is pretty high. On the hourly chart, we're looking at 36 right now. So stops something like that. And for targets, we use a retracement tool again. This time, for targets, we'll go from C up to D. And you can either use something called fixed targets, which is where you do not move the retracement with price action. If we look right here, grab the retracement tool one more time, X up to D. So D point completion is right here. So if I were to use just this, no matter what price action does above this, that would be called a fixed target. And an adjusted target is exactly what it sounds like. You adjust your target with price action. As the market moves up, you move your retracement tool up and adjust with the market to try to hit your 382 for your first target. Now, as many of you already know that have seen my other videos, I normally leave my targets fixed. Alright, so there's a little brief overview of how I trade cipher patterns. And now that we've looked at that, let's go ahead and talk a little bit about impulsive moves in the market as well. So, defining an impulsive leg is going to be one of the more difficult things you do when you're trying to trade advanced patterns. It's pretty easy to memorize all the ratios once you have spent some time in the markets using them. But the difficult part many people have is finding impulse moves and trying to figure out whether or not they pulled correctly. And there are a few different ways you can do this. The way I look at the market and the way I identify an impulsive move is a move that stands out. So what do I mean by that? And I also define it as a move that is impulsive. Impulsive would just be a very impulsive move in the market. So what we would be looking for is a lot of red candles if you're going for a short pattern. As you notice here for this impulsive move, let's look at this one as an example since we were just looking at this advanced pattern. Do you see how impulsive that move is from our X to our A? We have all red candles except one on the way down to our swing low. We actually have another one here, but you're already pretty much at the swing low once you have that green candle. So this entire move is filled with red candles except for one. Now, if you are someone that just has to have non-subjective rules for advanced patterns in order for you to test them correctly and trade them correctly, then you could say for my impulsive move, I need the market to only put in up to 2 green candles if you're going short on the way down on my impulsive move. So anything that had more than 2 green candles on the way down would not be a bearish impulsive move. If we were coming down and we had 1, 2, 1, 2, 3, for instance, let's try to find a situation that would not be an impulsive move. So for you, this move right here would not be an impulsive move. You would not be able to draw an advanced pattern off of this leg. If the market was to do this and create a bat pattern, or since we're actually talking about ciphers today, if the market was to do that right there, you would not be able to draw that pattern out and consider that an advanced pattern, because if you had that rule for an impulsive move, if you could only have 3 opposite direction candles for your impulsive moves, then you would have definitely broke that rule coming down, correct? So there's one way you can use a non-subjective rule for an impulse leg. Another one you can use is an impulsive move has only one opposite direction candle pullback. So if we were talking about this move here, this would be a correct impulsive move because you never get 2 green candles in a row on the way down. So that can be your rule. And obviously you can do the opposite for a bullish impulsive move as well. And there are many other ways you can do this, guys. You can also say that your impulsive moves must break structure. As you can see, our impulsive move here breaks through a support level. Another impulsive move here breaks through a support level. So in terms of spotting impulsive moves, that's something you can look for. It's just an impulsive move in the market where it looks like the market falls pretty quickly and without many pullbacks on the way down or up. So this would be considered an impulsive move up. And if we're looking at this, this may, I don't think it's going to be a bad pattern. I don't think that's quite a 50. No, it's not. But if this was to come down a little further, let's pretend it made it to a 50% retracement. This would actually be a good opportunity to take an advanced bat pattern because that move is impulsive. The reason I think it's impulsive is because we move up rather quickly with very few pullbacks on the way up. That is kind of the definition of an impulsive move. But as I said, if you are the kind of person that needs to write rules around impulsive moves, then there's definitely an opportunity to do that, and it would make your trading more consistent, especially if you're having trouble with doing that now. So if you're having trouble now with understanding how to identify impulsive moves and how to consistently trade the same way, then you can write non-subjective rules for an impulsive move in the market. Or you can go through the market and just identify impulsive moves by drawing them out. So for me, I'll go ahead and do that with you here, and maybe that'll give you a better understanding. I'll point out what are impulsive moves to me and what are not impulsive moves to me in the market. So here we have a move up that would be impulsive. The reason I believe this is impulsive is because we move up rather quickly without many retracements. We do have a little retracement in this area, but it's not big enough for me to call this not an impulsive move. Now on the way down here, to me, this is not an impulsive move. And if you look, you can tell the clear difference. Here we have a lot of green candles coming up, not very many pullbacks. But here we come down, we pull back. We come down, we pull back, we come down, we pull back, we come down, we pull back, we come down. There's nothing impulsive about that. Whereas for our impulsive move, we come up, we do make a little retracement, and then we just come right back up. You see how this is a lot more impulsive than our move down here? So this move, I would not draw an advanced pattern from this move down, because to me it's not impulsive. As I said, if you need to write non-subjective rules, of course this did have more than 3 pullbacks on the way down, and it did have 2 in a row right here. Those are just based on the rules that I described earlier that you can use. Here is a good impulsive move up. We moved up rather quickly. This was actually close to being a bat pattern, probably not quite an 886 on our entry here. This would be a good impulsive move down. Not very many pullbacks, just this one green candle here. This would be a good impulsive move up, but this, if we go from this swing low, this is not a good impulsive move. So it's almost common sense when you're looking at the market and trying to identify impulsive moves, because this clearly moves up rather slowly with a lot of pullbacks on the way up. So with that being the case, you definitely wouldn't define that as an impulsive move in the market. On the other hand, we take a look here, that is an impulsive move. So you can draw advanced patterns off these impulsive moves. Go ahead and try to guess what I'm going to say about this move here. Is that going to be impulsive or not an impulsive move in the market? If you said not an impulsive move, then you would be absolutely correct. We do get a nice move down from here, but the move goes like this. Down, back up, down, back up, down, back up, down, back up, down, back up. Consolidates in through here, then down again, and back up. Not a very good impulsive move. So we would not be drawing an advanced pattern from this being our X leg. Again, try to guess this area. Is this going to be impulsive or not? According to the way I look at the market. No rules, just according to the way I look at the market, this would be an impulsive move. We move up rather quickly without very many pullbacks. So as you can see, guys, if you'll go through the market and try to identify these impulsive moves, it'll really help you with your trading. It'll really help you be able to spot advanced patterns. And if you need to write those non-subjective rules down, go ahead and create some or use the ones that I've talked about here. And I'll list them one more time before we go and actually write them down on the chart for you. But these are going to be impulsive moves, are just going to be strong moves in the market in one direction. Whether it moves strongly to the downside, strongly to the upside with little to no pullback. So this would be impulsive. We have no pullback up to this resistance, then we get a nice cipher pattern looking something like this. So let's go ahead and write those rules down. The rules you can use for impulsive moves in the market. So your rules for impulsive moves in the market could be no more than 3 opposite color candles in the entire impulsive move down. And the better way to do it, guys, is definitely to do, as I was showing you down here on the chart, is to just use your eyeball. Go through the markets and try to spot impulsive moves and point them out. Like, as you can tell, here, impulsive move. A lot of red candles, not many green candles. Here, not an impulsive move. Too many pullbacks. Here, impulsive move. Not an impulsive move. All the way up here. Impulsive move down. We could have got an advanced pattern here and shorted the market. And get consistent with it. Once you're consistent in doing so after a lot of practice, then start your journey to backtesting your advanced patterns. Alright guys, so I hope you were able to learn a lot out of this video. I hope it really helps you when you're trying to identify impulsive moves, and for some of you that need it, I hope you go ahead and write down some rules for impulsive moves, because I remember how difficult it was trying to be non-subjective with strategies while dealing with the fact that I could not really identify an impulsive move well in the market. And to be honest with you guys, when you're backtesting, if you just use every leg without having to identify between an impulse move or not an impulse move, just use every single swing high and swing low, if you test that way and you're profitable, then there's no reason not to trade that way. Just because other people tell you that you're trading an advanced pattern wrong because you're not using an impulsive move, if you've tested it in the way that you're trading it and it's come out to be profitable, then you are doing it correctly. Always remember that. Always remember that it's not about what everyone else says is right and wrong. It's way more important that you're trading based on your knowledge and based on what you've tested in the market. So as I said, we did get involved in this trade in the EAP using the same exact rules that you'll learn if you head over to thetradingchannel.net and sign up for the EAP subscription, and you'll be getting 3 to 5 email alerts just like this one every week. If we take a look around the market real quick, I'm going to show you a couple of other trades that we're involved in. Here on the Aussie dollar, we were able to get involved earlier this morning, and we've already taken off our first target on this trade. If we look back at the pound Swiss, this is a trade we've been involved in for a while now. Looking at around 354 pips on this trade based on the analysis that you'll learn over at the EAP. And of course, the pound yen, which was sent out earlier this morning. And I'll actually go over and show you one more trade that I sent out in the analysis this morning. It was on the Euro New Zealand. And as you can see, I put that I needed to see a pullback for the entry on this specific trade. And if we head over to the Euro New Zealand, this was another trade that hit targets earlier. And if I zoom out to my 4-hour chart, you'll see right here the pullback that I was talking about highlighted in yellow. We were actually able to get involved on this pullback candle, and we banked in around 53 pips on this trade. So that's a couple of trades that we're involved in based on the EAP analysis. And that's also how I draw impulsive moves. I hope that helped you guys out. Hopefully you learned a little bit about cipher patterns as well. What I'll do before I go is, for those of you who are not interested at all in the EAP subscription, I hope you have a great rest of your week trading, and I'll talk to you guys soon. But for those of you who have stuck around and are interested in joining the EAP subscription service, what I'll do now is show you exactly how you can do that. If you head over to www.thetradingchannel.net, you will come to this homepage, and if you just scroll down, you can click for the Forex training. This will describe a little bit about the EAP subscription service and what you'll get. Click to learn a little more here. This is a more detailed explanation of the EAP subscription service, and if you decide you would like to sign up for the EAP, then you can go ahead and click this blue button here, click to purchase the EAP. You can click that and you can purchase the EAP for a 1 month at a time rate of $39.99 each month, or you can get the yearly option for 20% off, which puts the price at around $30 a month. And same thing for the quarterly option, you can get that for around $33 a month if you decide to do so. If you have any questions about the EAP, make sure to email me at thetradingchannel@yahoo.com, and I'll be more than glad to answer any of the questions you have. Thank you guys for watching the whole video. If there's something else you would like to see, then leave me a comment in the comment section below. And also make sure to leave a comment anyway and just tell me what you thought of this video. I do read and answer back to every comment that I receive. If you are new to the trading channel here, then make sure you subscribe to get alerted when I come out with new free educational content here on YouTube. I wish you all the best of luck in the markets next week. I hope to hear from some of you soon about the EAP subscription program, and I'll see you guys next time.
You got to close it.